Amazon stock has been absolutely exploding higher, surging nearly 40% in just 1 month after a surprisingly bullish Q1 earnings report. Hello everyone, welcome back. In today's video, we're breaking down Amazon's latest earnings report and why many investors are becoming extremely bullish on the company's AI future. Amazon stock is exploding, up 40% today. Amazon reported revenue of $181.5 billion, representing impressive 17% year-over-year growth. But the most important number in the entire report was AWS growth accelerating to 28% year-over-year. This acceleration strongly suggests that Amazon's massive AI investments are finally beginning to translate into real business momentum. Despite the strong earnings report, one area that initially concerned investors was Amazon's relatively low free cash flow. This dip here raised some red flags. Free cash flow came in at approximately $1.2 billion, which appears unusually low for a company of Amazon's scale. This raises concerns about Amazon's operational efficiency. However, this weakness is primarily the result of Amazon aggressively investing in infrastructure and AI capacity expansion. This type of investment cycle is not new for Amazon and has historically occurred before major cash flow expansion phases. We saw similar patterns in 2013 and 2021, where heavy spending was eventually followed by enormous monetization. This transformation into massive cash flow growth builds strong investor confidence. During the earnings call, CEO Andy Jassy emphasized that Amazon's AI business is scaling faster than many investors expected. He revealed that Amazon's AI revenue run rate has already surpassed $15 billion annually. This highlights the massive scale of their AI investments and the incredible growth trajectory, a game changer for the tech sector. According to management, this AI business is growing substantially faster than AWS did during its early expansion years. The chart illustrates this rapid acceleration. Amazon stock has seen explosive growth highlighted by this 40% surge. This is important because AWS ultimately became one of the most profitable and dominant cloud businesses in the world. Amazon stock is exploding, up 40% as investors pile in, and now investors are beginning to wonder whether Amazon's AI segment could eventually follow a very similar path. One of the most overlooked parts of Amazon's business right now is its rapidly expanding custom silicon division. Their custom AI chips are driving this explosive growth. Amazon's custom chip business has quietly become one of the top 3 data center silicon businesses in the world. The Amazon stock chart is exploding upward with a massive plus 40% gain. This surge is driven by their AI chip segment, which is already operating at an estimated $20 billion annual revenue run rate. And according to management, that number could potentially exceed $50 billion if sold externally to third parties. This shows the future upside. This is why some investors now view Amazon as a hidden AI chip giant rather than just an e-commerce company. What makes this even more interesting is that Amazon's data center chip business is already competing at enormous scale. Let's look at how Amazon stacks up against the leading semiconductor companies. Look at this. Amazon stock has exploded, up over 40%. In fact, Amazon's internal silicon operation is now larger than AMD's data center segment in several key areas. This is a game changer. Amazon stock has surged up over 40% this year. This explosive growth rivals high-growth tech, yet the market still does not value Amazon like a high-growth semiconductor company. This valuation disconnect presents a unique opportunity. This disconnect may create a major opportunity if investors eventually recognize the full scale of Amazon's AI infrastructure business. Because once the market begins pricing Amazon as both a cloud leader and an AI chip powerhouse, valuation expectations could shift dramatically. Beyond AI, Amazon's core business performance was also extremely strong across multiple operating segments this quarter. As the dashboard shows, all segments are accelerating, with strong growth in North America and AWS. North American operating income surged by 42%. Driven by massive operating leverage improvements. This operating leverage demonstrates how efficiently Amazon can scale once infrastructure investments begin generating revenue. As you can see, infrastructure costs flatten while profits rise sharply. At the same time, major segments including advertising, subscriptions, and cloud services all continued accelerating this multi-engine growth. This suggests that Amazon's business is currently firing on almost every cylinder simultaneously. Multiple growth engines are powering one unified Amazon machine, driving this incredible momentum. Even after this massive rally, many investors still believe Amazon remains surprisingly undervalued. This surge has led to a significant valuation compression, making Amazon an attractive buy. The company currently trades at a price to operating cash flow multiple of approximately 20.1. This premium valuation reflects strong investor confidence in Amazon's growth trajectory. Amazon's stock has surged, with the PE multiple up by 40%. That remains significantly below Amazon's long-term historical average multiple of roughly 26.6. This suggests Amazon is still attractively valued. This suggests that the market may still be underestimating Amazon's long-term earnings and AI monetization potential. And if Amazon successfully executes on its AI strategy, current valuation levels could eventually appear extremely attractive in hindsight. To better estimate Amazon's long-term value, many investors are now turning to discounted cash flow analysis. Let's look at the DCF model for Amazon, but let's apply conservative assumptions to model its long-term value. Even under these assumptions, the numbers suggest meaningful upside potential. The analysis assumes Amazon grows revenue and cash flow at approximately 16% annually over the coming years. This growth rate is a key driver in our valuation model. Under those assumptions, the stock still appears capable of delivering strong double-digit annual returns for long-term investors. Amazon's stock chart is exploding upward, highlighted with a 40% gain. Importantly, these projections do not require unrealistic growth expectations to justify the current valuation. Our checklist confirms the investment case is realistic and solid. Despite strong fundamentals, many analysts believe the market is still mispricing Amazon's true long-term potential. This gap visualization shows the potential upside. One of the biggest reasons is that the market is still focusing too heavily on short-term cash flow fluctuations. This short-term volatility distracts from the long-term trend, creating a significant investor bias here. This causes investors to underestimate the long-term value being created through Amazon's AI and cloud infrastructure. This reveals the hidden value behind the short-term noise. The AI business alone is already scaling at levels that most traditional models are not fully capturing yet. This chart shows Amazon's AI revenue growth exploding, far beyond what analysts forecast. But this surge highlights a gap between perception and reality. This gap between perception and reality is what creates long-term opportunity for patient investors. To fully understand Amazon, you have to look beyond quarterly fluctuations and focus on long-term transformation. Their roadmap is clear: e-commerce to cloud and now to AI infrastructure. Amazon is no longer just an e-commerce company, it is evolving into a global AI and infrastructure powerhouse. This strategic shift is driving explosive growth, with the stock surging over 40%. The combination of AWS dominance, AI acceleration, and custom silicon gives it a unique competitive advantage. This unified system creates an impenetrable moat, securing Amazon's market leadership. Amazon's stock is exploding, up over 40% this year. Very few companies in the world have this level of scale, infrastructure, and reinvestment power. This comparison really highlights Amazon's rarity. But the real story is the institutional money pouring in. And that is exactly why Amazon continues to attract long-term institutional investor attention. Even after massive gains, the long-term thesis remains intact. Amazon stock has rallied an incredible 40%. This confirms our long-term bullish outlook. The key driver going forward will be how effectively Amazon monetizes its AI infrastructure at scale. This pipeline shows the potential for future growth. Amazon stock is surging, up 40% as execution drives strong momentum. If execution remains strong, revenue and cash flow could expand significantly over the coming years. But execution risk and valuation expectations will continue to shape short-term volatility. Keep that in mind. This creates a market dynamic where conviction matters more than short-term noise. Focus on the long-term trend, not the daily fluctuations. Long-term investors are increasingly focusing on Amazon's structural advantages rather than quarterly fluctuations. This shift highlights Amazon's resilience and positions it for sustainable long-term growth. Look at Amazon stock exploding upward by 40%. This is where patience and conviction become critical investing factors. Patience equals returns. That's the key to successful investing. Because major technological shifts are never priced in perfectly at the beginning. Look at Amazon. The market underestimated its potential, then it exploded, gaining over 40%. The innovation curve shows this pattern. Early underestimation leads to exponential growth. And Amazon is currently positioned at the center of one of the biggest technological shifts of this decade. This explosive growth signals its dominance in the AI era. Amazon is the final positioning for this revolution. If you found this analysis valuable, make sure to like, share, and subscribe for more deep dive financial breakdowns. I'll see you in the next video.